Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the markets. Although today in the European Union is still the holiday, but markets already are open and we could keep on our analysis. Today we will not consider the gold market, just because everything that we would like to say we have said in the vehicle report. The trading plan is prepared, we just need to follow it. And you can see on the 4-hour time frame chart on the gold, by far everything goes nice with the bullish context that we described. So if you remember, we talked about the two fib levels here, and we said that market has to stay above the first level, preferably, would like to say, while the confluence on the hourly chart, this confluence around 2033 2036, we intend to use as some kind of the indicator validity of the bullish context. Today you can see market has opened up, and for now we do not see any reasons to correct the trading plan that we have just prepared. Instead of that, we will take a look at the Japanese yen, because we rarely take a look at it, and here's the few moments to discuss. But first I would like to say that Japanese yen right now is too politicized market, very strongly politicized, which is make difficult to use it, to trade it, just because it is too sensitive to different political and decisions from the central banks. It's mostly driving by these factors instead of the normal market mechanics that we usually prefer to trade. The cornerstone question right now in the Japanese economy is whether the Bank of Japan will step out from its dovish soft policy, whether they will be brave enough to start raising rates because of the rising inflation and devaluation of the population savings. So it's really a really critical moment right now for a Japanese economy. But at the same time, the Japanese market is very specific. For example, whether you do know or not, I will tell you that more than half of the all debt have been issued. It now stands on the balance of the central bank. So it is a very narrow market, and well, that's why Bank of Japan usually takes some decisions that seems, well, from the common sense, a bit curious, and that makes very difficult to trade it. Still, if we'll take a look at the technical picture, let's try to identify maybe some possible clues on what could follow. I prefer to start from the 6-month chart. This is really big picture, every candle 6 months, and take a look what has happened. Market has completed the target. It's already we have spoken about it already. It's 150 area. OP of this ABC pattern has been done. We see that upper direction stands relatively strong. Good acceleration here, nice performance, and chances that it could proceed higher to the XOP are also not really small. This might happen. But in the nearest time, since this is very important target that we have here, and stands more or less in agreement with this 140 level, 618 level, yes, this is huge difference between this level and the OP on lower time frame, but on the 6-month charts it looks, well, yes, it bit maybe too wide for agreement, but still it's relatively close to each other. And one of the possible scenarios that could happen, market could either keep going higher to the 1618, alternatively, take a look. Here is the hand shoulders has been done. AB equals CD target has been done. But we also could imagine a bit larger pattern. So it might be the left shoulder, right? This performance is ahead, and that might be starting point of the right arm with the deep retracement. As you understand, so long time frame as a 6-month chart can't stay independently from the relation to the fundamentals of the Japanese economy, on the solution of the central bank. And if we will follow this downward action, it means one of the two things. First, it either in the United States will be everything very bad, that makes people to make investment in the Japanese yen, or Bank of Japan will step out from its dovish policy. So in this case, we could get this significant drop. It is in a very long-term perspective. In the shorter term, since this is really strong target, we suggest that here more or less significant pullback, some retracement should start. Whether it will turn later in some deep right arm or not, we will see. But anyway, some normal respect here should come. That's what we could conclude from the really very extended time frame chart. Speaking about lower time frames, let's take a look first. We'll take a look at the monthly. Here, this performance, by my view, looks bearish. Why? Because by the market mechanics, it reminds me the performance of the double repo pattern. Yes, we do not have the double repo by letter. It's just because here is too deep retracement, right to the 30% support. But by the market mechanics, it starts looking like the double repo. Why? Because take a look, we have great thrust up. Market has completed the OP, showing the pullback where lots of buyers have stepped in. They were sellers on the Japanese yen actually, but just because they're trading on the USD 2 JPY, right? But we will speak in terms of the direction, right? So let's call it as the buyers. So the buyers step in here, suggesting that this is just a retracement of the long-term bullish trend, and has tried to pass Japanese yen through the top once again, but this attempt was unsuccessful and market collapsed. So those who bought right there now are trapped in the wrong direction. So it was really not enough power to push the Japanese yen through the top. And this is precisely how the double repo works. So if here bulls start capitulating, market should accelerate with the downward action. We have divergence. And I'm not excluding that if our suggestion correct on this deep retracement here, it might be the double top pattern with a possible drop back down. So it's very possible to happen. In terms of the double repo, it might be some kind of the double repo look-alike or something of this kind. But I wouldn't call it as a double repo actually, although the performance here is very similar. On the lower time frame, on the weekly, here market also mostly has completed the OP, and the fact that take a look that market briefly hasn't tested it and collapsed, it's also just some signs of the weakness. Here once again have the divergence. Now on the weekly chart you could see that market stands the circle. So market stands and oversold on the weekly chart. It means that here we probably could get some upper bounce, some retracement. Actually, it already has happened briefly, but maybe it will last a bit longer. We will see. And the fact that market wasn't able to proceed to complete the butterfly and that it has not been able to complete the OP, these moments looks bearish and suggests that probably our chances now are rising. So on the daily, market also stands on the confluence. So this was the weekly oversold, now stands around the confluence area. And well, some minor pullback here is still possible. It's also what we see on the daily chart, despite that this is really nicely looking downward acceleration. On the 4 time frame chart, this is important trend line. So upward breakout could mean a bit deeper retracement, but actually this is not the major technical tool that we use currently. It just indicates accuracy, how market just responds to this touching of this line. And we intend to watch what will happen on the hourly chart. Here you can see the market completes down A, B, C, D, OP. Now turns to some consolidation around agreement support, showing widening consolidation. For scalp traders, theoretically you could try to use this consolidation to consider maybe taking long positions. Market will accelerate higher, because here you could place relatively tight stop just below this area. It will be not very costly to your position if you will try to be involved in this trade. If you would like to make a long trade on the higher time frames, on the daily for example, in this case definitely you have to wait for something more valuable than the just minor pullback here, which scalpers could follow. Because we'll take the 4 time frame chart, right now here I do not see something really bullish. We do not have any patterns. This is very difficult to call it a hand shoulders. Probably I wouldn't call it this in this way. Maybe later market will form some kind of the butterfly. If it will be after some minor pullback, it will show another drop. So scalpers could try to catch this pullback, while the daily chart, fall time frame chart, if you'd like to buy, probably you will have to wait for something bigger. At the same time, this might be important for the bears as well, because in general we have the bearish context, and here the pullback we consider only temporal, just based on the performance on the weekly, on the daily chart. It's a really strong drop. The only the reasons why we expect the pullback is just because market had the support, so at weekly oversold and at daily confluence. This is the only reason why we suggest that it might be some kind of the ABCD maybe or something of this kind. So and if you would like to take the position on the daily chart, definitely you have to wait for something larger, some more valuable pattern. For the bears, is obviously not the best point for taking the new short position because of the same reasons. So actually we have to wait for the bounce. Maybe, as I said, it might be some kind of A, B, C bottom, D pattern or something. And then we could consider taking the new short position. So currently it's not good the place, because the big part of the downward drop already has happened. Market now is stuck with the oversold, and definitely we need to wait for some relief here out of the oversold situation to consider the new short positions. That's what we have currently on Japanese yen.